Hey, investors, good morning, good afternoon, and good evening. Scott Carson here, ready to dive into the latest and greatest from the Corpus Christi area. If you thought this coastal gem was just about beaches and good vibes, think again. The real estate market here is serving up a fresh batch of distressed deals and value plays hotter than a Gulf Coast summer. Let's pull out those fresh stats, uncover the trends, and pinpoint those investor sweet spots before everyone else catches on. Here's what's making headlines and what it means for your wallet in Corpus Christi real estate. First, Northwest Corpus Christi is turning into a pre-foreclosure paradise. KRIS 6 News reports Northwest CC, think Calallen and Annaville, is cooling with active listings up 23.4% year over year to 1,800 homes. Days on market stretched to 83, and median prices dipped 2.5% to $266,000. Investor sweet spot. This spells distress central. Look for pre-foreclosures up 15% in Nueces County thanks to energy sector layoffs in these northwest suburbs, ripe for flips at 10 to 15% below comps, plus a tourism rebound could juice rental yields to a juicy 7% by spring 2026. Get ready to scoop. Secondly, you have Orchard's refresh, flood zone bargains, and Bayfront renos. Orchard stats show median sales tanked 39.1% year over year to $140,000 over the last 30 days. With homes lingering 20% longer, 75 days. We're talking a 6.2 month supply, a clear shift to buyer turf. The distressed angle focus on flood zones in Flower Bluff and Portland, where bank-owned listings spiked 25% post-hurricane. These babies are trading 20 to 25% under market, perfect for cash flow multis. Pro tip, target Bayfront adjacents for your renos. Port expansion is set to lift values 4 to 6% by mid-2025. Third, the Coastline Properties report tax liens and industrial flips are up. Coastline Properties data confirms active listings are up 30.8% to 408 properties, pushing inventory to 7.5 months. Median list price held at $285,000, but sales volume is down 18%. Investor gold. Find South Side off-market distress from refinery slowdowns. Hello, tax lines up 14%. Commercial parcels in the ship channel area are undervalued by 18%, screaming for industrial flips. While a 3% price softening is forecast through 26, the LNG boom could double cap rates on value-add deals to a glorious 8 to 10%. Cha-ching, fourth is Zillow's update on short-term rental demand and Padre Island REOs. Zillow lists 344 active investment properties in Corpus Christi skewed towards high cap rate rentals like duplexes from $200,000. Overall home values slipped 3.1% year over year to $218,000. But here's the kicker. 15% are REOs in Padre Island outskirts, hammered by windstorm claims and trading 25% below comps. Standout stat. Visitor traffic is up 10% year over year, fueling short-term rental demand. Grab those distressed beach adjacents for 12% gross yields, especially with military relocations from NAS Corpus Christi padding occupancy. And finally, Texas Ally Group shares their tax delinquent treasures and industrial appreciation. Texas Ally. Real Estate Group's forecast shows statewide inventory up 30%, but CC's median only ticked up 0.3% to $266,000 amid 5.5% rate forecasts. The real gem, tax delinquent properties near the channel spiked 12%, and non-homestead foreclosures in Precinct 3, like Portland, are selling at 40% discounts for bids. For distressed hunters, it's redevelopment heaven. Stable energy jobs project 5% appreciation by 2027 on those undervalued industrials, perfect for 6 to 8% cash on cash returns. Man, Corpus Christi is practically shouting opportunity right now for patient investors. It's an affordable entry point with serious coastal upside. Which of these stories is interesting to you? Thanks for listening to the How to Invest in Corpus Christi Real Estate podcast. Make sure to subscribe and leave us a 5-star review to stay on top